I'm going to start off today talking about an article from CNN which speaks to the inventory glut that I told you was building and showing up, and you knew this months ago, and now everybody knows about the inventory glut and they're all surprised by it. But the point isn't that you're going to go to a store, there's a blowout sale and you get something for half price. It's bigger than that. It's if you're going to invest in the retailers. So for example, let's take a look at Walmart and Target, two of the big ones. And if the big ones are having trouble with the inventory glut, smaller companies will be disproportionately hurt by inventory mistakes. If it's a smaller company and they have too much inventory, that's going to be a lot more painful to that company than something that Walmart or Target or one of these billion-dollar companies does. The bigger something is, the more stable it is, the more secure. Walmart might have a big inventory glut, but they're a huge company. They can survive it. They can work their way through it. But a smaller company might have an inventory problem, and that's a lot more dangerous for them. The bigger a company is, the more they can survive things like lawsuits, a loss of many customers, a public relations scandal. Smaller companies take bigger hits than a huge corporation like Target or Walmart. But you look at them because they're sort of the bellwether, they're the leaders in the space. So what does it look like when a company has too much inventory? And you'll see some of these stock prices start declining as they deal with the problem that you knew was happening ages ago, and now everybody knows is happening. Target, for example, is trading as high as $268 per share. And now they're down to about $155 per share. And the markets have been so extremely volatile the last few days, these prices are maybe way off by the time you see this video. Things are moving quickly right now. And Walmart was at $160 per share and dropped down to about $118, formed a double bottom there, and now starting to recover a little bit, around about $135 per share right now. So the point isn't that there's inventory glut and maybe you'll get a bargain. That's true, but also the main point, I believe, is that if you're an investor, you'll see that maybe these stocks are in a little bit of trouble because of the inventory glut, and that's going to hurt the shares, so get out of the way ahead of time. There's so many people now are just learning about this inventory glut now, and they're saying, what am I going to do about it now? It's too late. The time to act on this was months ago. You always can be looking upstream. Whatever you're seeing in the news, it's too late. That's what everybody knows. When everybody knows it, it's too late for you to find an angle where you're going to get the most profit from that situation. And I know it might seem like I'm always throwing a wet blanket on this market rally, and I know that you probably want this market to keep on roaring higher, and so you're thinking maybe you're out of the woods. But my problem is I just see that so many people have such recency bias, especially with this kind of stuff. And all of a sudden right now, the market's popping up pretty significantly. They feel like they're missing out. They're going to miss the boat. It's going to go. Take a look from a wider perspective. Take a step back and take a look at what's really going on, because you'll see on the news, wow, the market's up 800 points and everyone's going crazy, and it seems like it's just, we're off to the races, everything's good again. But look at these stock charts for the NASDAQ, the Dow Jones Industrial Average, the S&P 500. You can see in every case, stocks have had a good few days here, but that's a bit of a recovery, maybe a dead cat bounce, maybe a sucker's rally. I don't think we're going to have new all-time highs, as you've been told by a few YouTubers. In every case, you can see we've had a few good days of strength, but if you go on a wider overview and you back out a bit and you look over the last year, you realize that we are down significantly across every market. So recency bias says things are going really well, but it's a downward trend still. We're not breaking out of it yet, and I don't think we will until, as I told you in that video, there's 6 things that have to happen for us to truly bottom and turn around and recover to significant gains going forward for many, many years. But until that point, there's so many landmines, so many things going wrong. And a big part I wanted to say too about that is that things are not that different than a few weeks ago. All the things that were bringing the markets down are not any different now. In some cases, they're even worse. But what happens is that the recency bias is going to bring a lot of people in that maybe they get back in too soon and they don't expect another down leg in the market. It's very likely they will have that and they're going to get washed out trying to get involved with this rally. I would be very cautious here right now, meaning leaning towards caution rather than desperation to not miss out on a single 1% gain in any stock or index or investment. There's often a time for caution in the markets. Even if you're desperate and greedy, just take a breath for a minute. Now's a hard time to act. But along with this recent market rally, you're starting to see that the US dollar is doing more like I told you it would do. It's slowing down, and it's not so much stronger all the time now where it's pushing gold prices down. And now you've seen the price of gold go from September 30th, when it was at $1,670 US per ounce, to where it is now closer to $1,721 on October 4th, which means it's been going up an average of $10 a day if you just look back to about 5 days ago. That's why I tell you guys, don't worry about gold. Just wait. And this is exactly what happened. It went up $50 in an incredibly short window of time. But that's nothing. You wait to see the moves that gold is going to make. It's not going to be $10 a day, okay? I feel very confident in this. I'm putting my money where my mouth is. And you can see right there, that's where I bought more Newmont Mining shares. I already had a bunch that I bought way up there, and so I'm taking a huge bath on that. But I made one of the biggest trades I've ever made, and I just bought Newmont Mining big time because it's such a value, such an obvious value. I mean, if I say this and you act on it and you lose your house and you go broke and your marriage falls apart, I'm sorry, but I'm not wrong. This is an incredible value to buy any of these. Kinross Gold, I Am Gold, Gold Resource Corporation, Newmont Mining, Barrick Gold. Great value, great unloved investment. You'll make great profits, in my opinion. I am wrong 100% of the time, that you'll make great profits going forward for a long time if you get involved with an unloved thing right at the beginning. We consolidated, as I showed you a few days ago. We're consolidating in this range, and once we break out of it, the longer the consolidation, the more strength when we finally break out of that consolidation range. And you're seeing it already that we're having great gains in short time frames over the last few days. Now let's see if we could extend it for weeks, months, and then yes, years. And one last thing that I'm watching that I always tell you, you got to keep an eye on this stuff. It's going to matter. It'll affect you here on the ground, even though it's overseas we're talking about, because it's actually quite bad there, the way this is all falling apart. And this is also something you want to watch, see how it's going in the United Kingdom, and then you can see that that's how it will go in America when we're dealing with these exact same problems. They've got inflation, they've got energy concerns, different, more serious energy concerns, but they've got energy concerns. There's a lack of spending. They're entering recession. It's all the same. It's all similar. But it'll be a real estate crisis in the United Kingdom, which they're kind of already starting to have the rumblings of, but it'll get worse. And that might even spook people over here in America in the real estate markets, which are going to also be on their way down at the same time. And you see things go bad somewhere else first, and then you react to that, and maybe it gets worse here because of that. Listen to this. This was from CNBC. The UK's property market has been thrown into turmoil after political turmoil saw borrowing costs in the country soar. Horribly written sentence to say turmoil twice in about 12 words, but that's the writer in me. Sorry, just ignore that. And why I want to read you this, it's a really good summation that'll really put it in perspective for some of you. The UK Finance Minister, Kwasi Kwarteng, sent interest rates on the UK government bonds to their highest level in over a decade. This saw British property stocks become less attractive to investors who turned to government bonds as a higher yield and safer bet. As a result, the investment research group Stifel Europe made significant downgrades across the sector. That's basically saying that British real estate stocks took a hit and a lot of money moved out of them and went to bonds, which were deemed and are deemed as safer investments, even though they're not. They just have been for such a long time. We forget that there are downsides to bonds, but they're all going to learn that in the coming year or years. There's really not a lot of good safe havens in this storm, I don't believe. What do you go to? Do you go to real estate? Do you go to bonds? Do you go to cryptocurrencies? Do you go to blue chip stocks? Everything's coming down together, as you knew it would. And now everybody else is finding out what you already knew. You guys are starting to look pretty smart. But I do believe things are building up a lot of risk, a lot of branches that could break and take the whole treehouse down. This is a time for caution. I truly, thoroughly believe that. Don't worry about trying to figure out how to make your 5% or 10%. Maybe you can make even more, but just do it smart, do it right, do it slowly right now. Unless you want to be a day trader, there's so much commotion that and so many moving parts that it's going to be very difficult to make a secure and safe investment bet. I believe that getting involved in some of these gold mining stocks is a great investment going forward. And we're looking at a lot of rare earth element stocks we talked about in a recent report. We believe there's going to be some investment opportunities in the concept of water. Clean drinking water, water for irrigation, water for industrial uses, water for things like fracking. Whoever has the water, that will become more valuable over time, not less. So this may be a time to get involved in that space, but you guys can decide for yourself when you read about the stocks that we're going to be talking about. And you guys might be wondering where I am. Some of you probably know. I am at my girlfriend's house in Detroit, and I set up, this is what I want to talk to you about, the Army, the Peter Leeds Army. This is the kind of stuff we can do. Not that we couldn't do it, and we would have done it anyways, I'll be honest with you, but the Army, you guys show support, and I want to make sure you guys have good sound quality for this video. So I went and I got, it's my favorite store. It's the Micro Center in Detroit here, the best computer store in the world. We got a great microphone. It's a little echoey in here, but I got to ask Jane if I could put some sound foam all over the walls. So I can give you guys the best quality videos, even when I'm on the road here. Not on the road, I'm actually at home right now. I can give you guys really good quality content. Thanks to the encouragement from all the support you guys are giving me. And I got to say thank you guys. We're loving the pickup in the Army. I even emailed Roman the other day and I said I'm really happy with how it's going. Things are going really well because it's a good value for value transaction. That's how I know I'm onto something here. It's really good for you. It's really good for me. Because it's a couple of bucks for you. Then I'll make sure you get good sound quality, good lighting. I even have studio lights here. And that's all thanks to all you Army members. Anybody joins the Peter Leeds Army to help support what we're doing here, we'll just keep giving you more and more value. For the few dollars you throw our way, we're going to give you guys a ton of really good, high quality, professionally produced videos. But overall, I just want to make sure to get a video out today, let you guys know I'm still around here, and we're getting set up here. I got a whole, took me about a day and a half to set up this office here, and now I can operate and work from here and make sure that you guys get the best videos that you need to see at the best possible time. My love, shout out to everybody in the Peter Leeds Army. We love you guys. It is so encouraging and helpful that you guys are becoming a part of this movement. I know a lot of people, maybe they don't invest and they don't want to put out $200 for the Peter Leeds newsletter to find stock picks, and they want to support the channel. They like the YouTube videos. This is a way to do it as well. And I know that a lot of people who are newsletter subscribers also want to help support the Peter Leeds YouTube channel and the Peter Leeds team, because we are giving you information that you're getting from us in a unique way that you're not getting from anybody else. And we happen to be more correct than most people lately. We're doing pretty well, and we're going to keep on doing pretty well. More research, more analysis, more videos, more in-depth content for you guys because of the support you're giving us by joining the Peter Leeds Army. We love you guys. Thank you so much.